Hey, I'd like to welcome you to another episode of Money Matters Top Tips for Success, where each and every day I bring on new business owners, entrepreneurs, and executives and have them share their top tips for success with you. My name is Adam Torres. You can follow me on Instagram at AskAdamTorres. Keep up with my book releases, book tour schedule, signings, all that other good stuff. Always love to connect with you there. And as always, if you'd like to apply to become a co-author of one of my upcoming books, just head on over to the website, moneymatterstoptips.com, and click on Become an Author to apply. All right, so today I have Jim Mosquera on the line, and he's principal over at Sentinel Consulting. Jim, welcome to the show.
Hey, Adam, thanks for having me.
So I'm excited to get into our topic today, which is different approaches to business financing. But before we do that, let's get a little bit further into your background. So how did you get started in your career in business?
Well, I'm actually an immigrant to the United States. I came to the United States from Panama. Spanish was actually my first language. And curiously enough, my background has nothing to do with what we're going to talk about today. I've got a couple of degrees in engineering, worked in the telecommunications and technology field for quite a while, but was kind of cutting my teeth in parallel, doing things where I'm studying the financial markets, the commodity markets, the economy. Really started publishing books and newsletters on those topics. And then late 2013, early 2014 is when I began my firm, Sentinel Consulting.
Yeah, that's awesome. And I think that's a great transition. Let's just jump right in. So tell us a little bit more about Sentinel Consulting and what you do.
Sentinel Consulting is I would call a general purpose finance organization that what we do is we try to match borrowers with lenders, and that has a lot more components than I think people give it credit for. So one of our features of our business is business lending. Another thing that we do is business or debt restructuring when companies run into trouble where they're having problems, with cash flow, and they may find themselves on the verge of civil litigation or they are in civil litigation. We try to provide a financial resolution to those cases. And then the other thing we do is we offer consumer financing, which is financing that a business owner can then offer their customers.
That's awesome. So let's just get into today's show topic. So different forms of business financing, different approaches, big topic, a lot of business owners, entrepreneurs, executives listening that are in that position. Where do you want to begin?
Well, I think probably the most important thing, Adam, to understand is that there's this constant tug of war between business owners and lenders. And when I use the word lender, I typically will refer to, general purpose lenders like people think about our banks. Business owners tend to be risk-seeking. Lenders tend to avoid risk. Their worldview tends to, again, be polar opposites. Business owners are very optimistic. Lenders are very pessimistic. Business owners, for the most part, work in environments that are less regulated than the financial industry, particularly post-2008. So what's important to understand is when you talk to a lender, you've got to look at things from their perspective as well. And one of the things I tell business owners is if they have money deposited in a bank, whether it's a business checking account, a savings account, a CD, anything on the personal line, you want that bank to be very fiscally prudent with your money. And that's a very, very perhaps the most important part of a banker's job. The other thing that's important to understand is when you're applying for credit is that there's a couple of different factors that need to be considered. The business factors and the personal factors. Well, the business factors would include things like collateral. What will you be able to put up in the event that the credit transaction goes sour or goes south? Most homeowners are very familiar with collateral because it's their home. Cash flow. Do you have the appropriate amount of cash flow to pay off this loan? What's the financial strength of your company? And one aspect that gets very, very often overlooked is a legal consideration. Is your company the subject of any litigation either on a plaintiff side or a defendant side? If your company has either one of those facets to it from a legal perspective, it will make banks very, very leery of and perhaps even negate any potential transaction you might be able to do with them. On the personal side, we've got credit score, obviously, is very important. Do you have insurance? What happens if, you meet your unfortunate demise and there's still a loan out there? Do you have skin in the game? Many entrepreneurs that I've spoken to, they think that they can just borrow money from some entity, whoever it might be, and have no equity that they've put into the transaction. And then the same thing that would apply on the legal side. If you're the subject again, of litigation on the plaintiff or the defendant side, it will make lenders, less likely to want to engage with you. So that's kind of the backdrop, if you will, of dealing with in the process of loan acquisition. So if you imagine that, you're a banker and you're in the underwriting department and you've got all these factors that I've just mentioned, and then one day some business comes to you that they're in the restaurant business. Another time it's an IT business. Another time it's a cleaning business. You have this kind of multiplicity of businesses that they have to evaluate from an underwriting perspective. It's very difficult for an underwriter to handle all that, and that kind of tends to make the lending institution a little bit more risk averse because, again, they don't necessarily have that underwriting knowledge in that specific industry. So what happens if you could create an environment where you had lenders that were more stratified according to the business that they were going to lend to? And that's something that I think Sentinel Consulting can bring to a lot of organizations, which is have access to lenders that become very specialized in areas like insurance, agriculture, transportation. There's a whole, there's a whole kind of cornucopia of different lending institutions or organizations that are out there. And if I'm earlier that I mentioned that lenders tend to be highly regulated. Well, these pools of money tend to be less regulated because why? They're not associated with the banking industry. They may be private equity money. It may be, just a group of investors that have gotten together and created these lending pools. So it's very, very, it gives a lot more flexibility, Adam, to work with organizations that then have these resources available where they can then tailor loans according to industry type.
Well, and I mean, that makes perfect sense. So when you think about it, I mean, other industries have niches and have things that they specialize in. So why would lending be any different, right? And if you can go to a specialist in your area or in your area of expertise or your niche of business, then why wouldn't you versus going to a generalist? So the big banks for certain things may be more on the generalist in that case, and it's going to be different getting the leverage that you need or the loan you need and versus the lending pools or the specialized lenders. So why wouldn't somebody want to use the specialized lenders? Is it just kind of like a lack of knowledge thing, like people don't know they're out there? I'm just curious.
I think you just nailed it. Sometimes oftentimes there's a lack of knowledge that organizations like this, basically lending brokers, or that they exist. And let me bring up something else that I want to hit on that you said. Even within the banking industry, like I'm in the St. Louis metropolitan area, you may have certain banks, and I use banks sometimes as one of my lenders, that they want to look primarily at real estate transactions, and others they want to do more, C&I type loans. And that varies, again, among the different institutions, and it could be their own personal preference. It could be from a regulatory perspective, a regulator's told them, we think you're overemphasizing, retail, and so you need to lighten that load or don't make any more loans in that regard. Well, a lot of times business owners, most of the time, they're not going to know that. So it's important to have relations, or if you're going to deal with banks directly, to understand, what is their appetite, not just for risk, but for the types of loan that you will be asking for. Yeah,
and I think and what's interesting to me about this is just based on the lack of knowledge part, what may have happened, and it may have happened to some of the people that are listening to this right now. They went to their local bank. They're like, oh, I've been doing business with this bank for 15 years or for 10 years or whatever, and I have great, good credit, all the other stuff, personal, good business credit, and they still deny me for the loan. So maybe, I'm not a good candidate. They might be looking at themselves or their situation like that, and they may not know on the back end of the bank, because the banker is not going to tell you. He's not going to be like, hey, by the way, our balance sheet says we only can do real estate right now until we hit XYZ ratio, because that's where our board feels is the prudent thing to do. I would have loved to have made the loan to you, but I can't. Nobody's going to tell you that. So the bottom line is, if they don't know that specialty banker, if they don't know about these pools, or if they don't know about other ones, a lot of times they just kind of stop. Would you agree with that, or?
Yeah, and that can be very, very frustrating, Adam, for the small business owners, because then what happens is, they start casting aspersions on the banking industry. And I tell them, don't do that, because
don't do
banks
that.
are being, again, don't do that, because banks again are being they're being good fiduciaries with depositor money. right. And as I've told people, the last thing you ever want to see in an economy is people lined up around the block to get money out of a bank because there's a bank run. I mean, that's something that will cripple and lock up an economy. So it's just important to understand, what the landscape looks like and where the proper place, to ask for that credit is.
No, that's awesome. So, Jim, if somebody's listening to this and they do want to learn more about Sentinel Consulting or to connect, what's the best way for them to reach out?
Well, I think we're actually listed we're probably like number 2 or 3 in a Google search if you type Sentinel Consulting, Sentinel, and then consulting. And if you just want to look us up on a website, it's Sentinel Consulting, all one word, .biz, B-I-Z. I have an author page at jimmosquera.com, JIMMOSQUERA.com. I'm also on, Twitter. My handle is The Sentinel Man, and you can find some updates there. But between the website for the consulting business and my author site, there's definitely a lot of resources there for you.
That's awesome. Well, hey, Jim, really appreciate you coming on the show today and all the great work you're doing to help our business owners and entrepreneurs out there succeed. And to the audience, as always, thank you for tuning in. Hope you got a lot of value out of this. If you did, don't forget to subscribe to the podcast. If you're watching this on YouTube, leave us some comments on what you think about banking and all that other good stuff. And don't forget to hit the subscribe button there. And Jim, thanks again for coming on the show.
Thanks a lot for having me, Adam.